And good morning. This is Mary Ellen McGonagle, and you're watching the MEM Edge show. And this is the show where we put you in front of where the action is in the broader markets. And it's certainly an exciting time to be in the markets. We're seeing at least two of the major indices hitting all-time highs in price. So let's go ahead and get started today. I'd like to review with you what we are going to be covering. And as usual, we're going to go ahead and take a look at those broader markets. We'll look at the indices, see where we stand now. And of course, we are in the throes of a very exciting earnings season. So we're going to take a look at some of the stocks that have gapped up here recently, and some of it is going to be earnings driven as well as news driven, so that you can take a look at what to look forward to going forward. We're going to take a look at historical precedent as far as stocks that have gapped up in prior earnings periods, so you can get a feel for that. And then also relevant stocks that are due to report earnings this week. This is really pretty much the apex, the pinnacle of earnings season this week, not only in the number of stocks that are reporting, but we do have a number of large cap growth stocks. So we'll take a look at some of those names that are due to report this week. And then reviewing oversold healthcare stocks. That's been certainly on the minds of a lot of investors, but more in line with which healthcare stocks are due to report this week. There are a number of them, and they could very well set the tone for a number of other healthcare stocks that have gotten beaten down over the last month or so. And then lastly, what I call the Amazon effect, and that's when large cap companies report. Oftentimes you will see a trickle down effect where other companies that either are competitors or supply product to those companies. So we'll take a look at Amazon and then another large company that's due to report this week. Actually, it's going to be Apple. And I'm going to walk you through some of the suppliers that could easily be impacted depending on where Apple comes in with their numbers. So let's go ahead and get started. What I'd like to do is go ahead and take a look at these broader markets, see where we stand. We're going to take a look at a daily chart of the S&P 500 index. So we are looking here, each bar here, of course, is 1 day of trading activity. The S&P 500 did hit a new high in price. So we've seen a recovery from the lows here. We're up over 25% in the S&P 500 from this trough here at the end of December. And we can see that the index is hitting a new high relative to this October peak in price. So what I've done here, of course, is overlaid some simple moving averages on top of this price history. And we can see this green line is the 10-day simple moving average. And ideally, we want the index to remain above this upward trending 10-day simple moving average. Quite simply, this line is a smoothed out version of the last 10 trading days. The red line here is your 50-day simple moving average. Blue is the 200. And we also want to see the 50-day in an uptrend, so very much in place right now. Above, I have what's called an RSI. That's a relative strength indicator. We want to pay attention not only to the slope here, but the position relative to this net neutral 50. Above this is positive. So we are trending upward and above 50, so all good standing there. We're just tipping into this above 70 on the RSI. That indicates overbought, but we are certainly not way overbought. We are in good standing there as well. And then down below, I have what's called the MACD, the moving average divergence, also paying attention to the position relative to this net neutral. It's positive there as well. Now, I will say that currently the S&P 500 is at 2942. And a lot of analysts are looking at that 3,000 level. That's expected to be the next potential area of upside resistance. So we're about a little more than 2% below that. But for now, certainly we are in a confirmed uptrend. Let's go ahead and drill down, take a look at the markets in a little more fine-tuned way, if you will. We're going to take a look at the various broader indices. Now, this is what's called candle glance. This is accessible from that first page interface on stockcharts.com. And then from here, you can populate it with various indices and ETFs, which is what I have gone ahead and done. So we have each of the broader market indices, as well as technology, financials, consumer discretionaries, and so forth. So what I've done from there is gone ahead, added an RSI indicator. I want to see where the relative strength is among these broader indices, these ETFs, sorted that descending order. And so what we're looking at here quite simply is strength to weakness. So on the upper left side, we can see the NASDAQ is leading the broader markets. The NASDAQ also has hit a new high in price. And of course, the NASDAQ is very tech heavy, technology stocks. So sure enough, the next strongest within the broader markets is this technology ETF, which has really been leading the broader markets here, certainly over the last month or so. Financials, interestingly, coming in quite strong. They're up 1% today, and this is a recovery. We can take a look at a longer view of the financial. Let's go ahead and see if I can blow this up. Here we are looking at the financial sector, and what I wanted to point out to you here is that the financial stocks really, when we look at this recovery, had periods of underperformance and not staying with it. A lot of it has to do with certainly the interest rate outlook. Interest rates have dropped. A lot of these financials benefit from a rising interest rate environment, as certainly we had trouble here with the spread between the long-term and shorter term, but financials really finding their footing here, and a little bit as lagging as far as potentially reaching new highs. But if we have time, I'm going to go ahead and drill down, and we can take a look at some of the leaders here within the financials so that you can play this newfound strength that we are seeing here in the financials. So let's see if I can go ahead back. I did want to take a minute and review some of these other areas, but there are certainly other ways that we can take a look at where the current strength is in the broader markets. What I did want to do right now is go ahead and take a look. I talked about some of these heavier weighted stocks that are going to be reporting this week, and it's very important to pay attention, because how these stocks respond, or certainly how they report and then respond, can really move the markets. So today, of course, is a big day. We do have Google coming in and reporting their numbers. We can go ahead and take a look. Now, Google has really been in a very strong uptrend here. The stock is poised to break out of a very long base, about an 8-month base here. And what we can do is look at the weekly price chart to get a little better feel for that. And a lot of the work that I do, I'm looking for stocks that are potentially emerging out of these bases. And we're in a period now, given the strength in the broader markets, the fact that the markets are hitting new highs, we are seeing a number of these stocks that are emerging out of these super long-term bases. Google hit a high back here in August, and certainly we are very quickly approaching that high. We're looking now at a weekly price chart. The RSI is trending upward, and you have your MACD not only trending upward, but up above this net neutral zero. So very bullish position here for Google. Let's take a look at some other names that are due to report that are larger cap in nature. Boeing is due to report. And of course, this stock has had a lot in the way of difficulty recently with their aircraft malfunctioning. So we can see this is that drop here on the bad news with Boeing. The stock dropped below. This red line here is your 10-week or 50-day simple moving average. The stock is finding support at this longer-term 200-day simple moving average, but we can see that the RSI is neutral. Your MACD is trending downward. So earnings with Boeing could be really interesting as far as the impact, because the stock has gotten beaten down. It's certainly quite a bit less expensive than up here in this period back in February. So all eyes on Boeing. And then one other name that has been a really big winner here recently is Disney. They're due to report today after the close. Of course, they've had super news as far as the Avengers movie this week, breaking all kinds of records. And we can see this is that gap up. We're going to get into this a little bit later as far as how to play these gaps up, but Disney is due to report today. Let's go ahead and move on. I talked about some of these healthcare stocks. So tomorrow, in fact, we have 3 very large cap pharmaceutical stocks that are due to report earnings. And again, this is going to be interesting because a lot of these stocks have gotten beaten down with the broader market. Let's take a quick look at the healthcare sector, XLV. This is the S&P, and take a look at this really decimation here. This group got hit. We're looking at a daily price chart. This has everything to do with the Medicare for All and certainly the political headwinds hitting the group out of DC, because policymakers are talking about eradicating healthcare insurance, public or private healthcare insurance, as well as drug prices are a big hot button. So healthcare stocks, this uncertainty is causing the group really to fall out of favor. But it's an area where a lot of stocks got, the baby got thrown out with the bathwater, if you will. Stocks that really would not be impacted really sold off. So let's go ahead and take a look at Pfizer. PFE is the ticker symbol. These guys are due to report tomorrow. And among these, there is one stock that really is quite compelling. But here we can see Pfizer sold off, certainly with the broader markets here. This is very similar to that XLV ETF. And we can see that it is wedging up here. This is not a very healthy chart by any means. We can see that the RSI is starting to trend upward, but it's still below this net neutral 50. And this 10-day simple moving average, not only is it downward trending, the stock currently is finding resistance. So we need to see a break up above that 10-day before the stock realistically could advance a lot further. And from here, we can see that MACD. We want to see that black line crossing up through the red. I'll take you back to this early February period to give you a feel for what you would like to see. This black line crossing up through the red, but equally important and more important as well is you want to see the MACD break back up above this net neutral. So up here at the end of February, we were getting some positive flashes here with the price moving up above the simple moving average. We had the MACD trading up above that net neutral 0, and then the RSI also got up above this net neutral. So it did start to reverse this downtrend before the political headwinds out of DC. So Pfizer is not looking healthy by any means. But let's take a look at Eli Lilly. They're also due to report tomorrow. And we can see a very, very similar pattern here with the stock price. In this case, it has broken above that 10-day, so that is certainly encouraging. But we can see the RSI, while it's trending upward, still below that net neutral 50. MACD, we have not gotten that crossover yet as well. It's below that net neutral. So not looking particularly healthy, but ideally, depending on how the company comes out and their results, we could see a trend shift, if anything dramatic. But here is a much better looking within the healthcare space that is actually not tremendously better looking. This is Merck, MRK, but it is certainly a little bit closer to getting to that net neutral 50. really all of these stocks are looking very, very similar. But as these larger cap names go, so too oftentimes can the group and the broader markets. Let's take a look at another stock within healthcare. Now, this I talked about names that sold off, but realistically, they're not going to be impacted by any policy shifts. This company is ZTS, Zoetis, and this particular company provides healthcare services to its animal health care. So we can see that the stock did sell off very briefly. And what I like to see when stocks do sell off, if they find support at their upward trending 50-day simple moving average, oftentimes this pullback can be an ideal buying opportunity. So ZTS is due to report on Thursday, and they are a global leader in this healthcare providing healthcare for the animal industry. So what we can see here is that RSI is up here above this 50, trending upward. The stock is poised to hit a new high in price. And I talked about stocks as they break out, they can be really quite attractive. So what we want to do when you're drawing these bases, you want to key in on prior highs in price. And then as that stock price hits a new high, that's called breaking out of a base. And if we see that breakout occurring on above average volume, really provides quite a bit in the way of confirmation. So again, we have that positive RSI. MACD is up here above this net neutral zero. We can see that that black line is poised to cross up above that red in a very bullish fashion. So let's go back and take a look at another longer term base. I'm taking you back to that November high that the stock price did in fact hit. And in February, we had a period where the stock did break out of the base, and you can see the uptrend that ensued after that breakout. So that's what we're on the lookout for here, is this type of upward move after the stock breaks out of a base. So we'll keep an eye on this one. It's due to report on Thursday. So those are certainly some of your bigger names that are coming out with earnings this week that you will want to keep an eye on. One other name we'll take a quick look at is McDonald's, of course, a bellwether name, certainly in that restaurant space, global company. Let's take a quick look at McDonald's, and we can get a feel for how they're heading into their earnings. They're pulling back a little bit today, but we can see the stock is very much in a confirmed uptrend. Stock is finding support at this upward trending 10-day simple moving average, a bit overbought. I talked about the RSI as it gets above that 70, but certainly makes sense given this extended advance the stock has had over the last 2 months. Investors are going to be keeping an eye out on same store sales. That's going to be the key metric here as McDonald's comes out and reports their earnings. And let's go ahead and move on. I talked about reviewing stocks that have gapped up. We've seen a number of stocks gapping up, not only on earnings, but certainly on good news. So what we can do is take a look at Qualcomm. And this is a company that came out certainly a little bit over a week ago. They had very good news. And this particular stock, we can see this big move here and then the subsequent gap up, and it has everything to do with they had a court hearing with Apple and a dispute that they were able to settle outside of court. The markets really liked that. They also got back in bed with Apple. So all good news here. We can see with these types of gaps up, you are going to want to pay attention to these shorter term key simple moving averages, because oftentimes when a stock gaps up, it will mark and fill gap will fill back and forth as this 10-day simple moving average catches up. So here we are in this back and fill type of formation over the last 5 trading days. Really, this is consolidation. This is really, in essence, digesting this big gap up that the stock had. So oftentimes it will consolidate with an eye toward another leg up, but take a look at just how overbought this particular stock is. It can remain overbought for some time. It's more with an eye toward a potential pullback. So from here, let's go ahead and take a look at historical precedent. We can go back to a couple of stocks that reported last quarter, see how they performed following their gaps up. And this is something I talked about in the Chart Watchers report over the weekend. For those of you that do not subscribe to it, it is a free newsletter that comes out every week now. Super. It's just filled with very, very informative articles. And so I did review this particular stock, as we can see back here, as an example of gapping up and how to play that gap up subsequent to these big moves. So I'm taking you back to the end of January. This is Xilinx XLNX. We're looking at a daily price chart. Xilinx reported earnings back here, and we can see this big gap up. It was up about 14%, another subsequent 4%. So when you see this explosive move on huge volume, oftentimes that's telling you that institutions want in. The numbers were huge. Management guided much higher for the rest of the year. So in order for them to accumulate or to assume a position within a particular stock, it will take some time. So what we can see after this gap up is what I talked about, is that consolidation. The consolidation can take one of two forms. We can see a back and fill as the 10-day simple moving average catches up to the price of the stock, or the stock will pull back to that 10-day simple moving average, which is what we saw here in early February with that XLNX. And then from there, the stock is in essence finding and using this 10-day simple moving average as support. The stock will bounce off of this. This was a pullback in early March that impacted the entire market, so it did undercut for a very brief period, but sure enough has before dropping quite a bit last week on poor earnings. But what we are keying in on here is how to play these gaps up and what to look for as far as an entry point. So using that 10-day simple moving average as your guide. Of course, you want to see your other indicators signaling flashing positive, your RSI up above that net neutral trending upward, and then this MACD trending in an upward fashion in line with the stock's price. Let's take a look at another example, again, taking you back to earnings, Q4 earnings that took place in the beginning of this year. This is a small cap software stock. The ticker symbol is APPF, Appfolio. And what I wanted to draw your eye to here is this is a gap up here at the end of February. It's not really quite as easy to see as the significant gap drop in Xilinx gap up, but it did gap up here from the certainly open, and the stock in this case pulled back. So I have other simple moving averages. We're looking at a daily price chart, but again, this 10-day. So if a stock gaps up and then subsequently pulls back, and I talked about the broader markets, this pullback in APPF had everything to do with that early March pullback that we saw in the broader markets. But what you want to do is play the breakout. Let's see if I can. I apologize. My drawing skills are escaping me. Let's go ahead and erase that so I can give you a much clearer picture. So what we want to key in on here is the stock price hitting a new high, pulling back with that broader markets. Okay, I think I have to go back to the drawing board here. But what we want to do when we see these types of pullbacks is, as the stock breaks out to a new high in price, that is your ideal entry point. Again, we are looking at a 10-day simple moving average with this green line. And oftentimes, as the stock pulls back to that 10-day, that is another potential entry point for these stocks. The point here is when these stocks gap up, you do want to pay attention because oftentimes it is just the beginning of an extended move. Of course, it's going to all have everything to do with how the broader markets are behaving, and you want to see a continued positive outlook for that particular stock. So what we're looking at here is Microsoft, MSFT. The company came out with very strong numbers last week, gapped up, and here is that consolidation that I talked about. The stock is pretty much in a go nowhere environment, and it will need time to digest that significant gap up. And then again, oftentimes paying attention to that 10-day simple moving average is going to be really quite powerful. Let's go ahead and move on. I talked about how when a stock reports, oftentimes there'll be impact outside of that. I called that the Amazon effect. Let's take a look at Amazon. The stock came out with very good numbers last week. And in addition to reporting positive numbers, this stock is very much in a powerful uptrend right now, subsequent certainly to their report. But the company also announced that they are going to be offering free one-day shipping as opposed to their current or their prior accommodation where they had 2-day free shipping. So when we see this type of move, oftentimes or announcements, you'll see other stocks that will be impacted. And in fact, in this case, they were other competitors. I'm going to be pulling up Target. TGT is the ticker symbol. Take a look at this drop here. The stock fell almost 9% on the news, broke below this 200-day simple moving average before buyers did come in. Target already offers one-day free shipping, so the impact was really quite swift. Today, Target did get an upgrade because of this sell-off. There's a sense that it was sold off a bit unnecessarily, but before getting back in and buying on this dip, I wanted to alert you to what to be on the lookout for, and it has everything to do with the stock price relative to these key simple moving averages, ideally at least up above this 50-day simple moving average. And currently we are still below that. The stock is trading at 77.65. Your 50 days at 77.92. But take a look at this RSI now. It's trading below that 50. You will want to see a reemergence back up above into positive territory. Again, using history as your guide, taking us back here to the December recovery period. Stock price goes back up above these simple moving averages in line with an upward trending RSI and MACD. We had the positive crossover, but it's not until we get up above this neutral that you can put that in line with other positive characteristics. So let's take a quick look. Apple is due to report after the close today. I'm just going to take a minute here and point out other add-on plays. This is not Apple, but there are other companies that, actually a number of them, that supply products to Apple. So depending on how the company reports and comes out with their numbers, let's take a look at a couple of companies. And I will have to leave it at that. But one particular one is Micron Technologies. ADI is another. They provide the touch screen for the iPhones. So there are going to be add-on and other companies that will be impacted. And I am going to go ahead and leave it at that. For those of you active in the markets, happy trading.